Tom White of TD Ameritrade joins us now for the Trader Rundown, here to give us a glimpse of what he expects in market action. So what do you think here, Tom, about the market this week?
It's pretty strong. I think it's going to be based on the Fed decision later this month at their FOMC meeting. The odds of a rate hike are now down to about 15% at that meeting, after trading about 35% just over a week ago, and that's based on the jobs data that came out last week. We've got some more information this week. We had a bad ISM number to start the week off on the services side, and that's been continually going down. So there are red flags in the economy, and I think the overall market is kind of priced in that we're not going to have a rate hike in September, and probably not until after the election in November, which automatically puts people on high alert to go into riskier assets such as equities.
So no matter what the Fed presidents are saying, you're really watching the signals that the market are telling you about a rate hike.
Yeah, the bond market's usually the leader in this, and bonds have continued to go up. Rates are continuing to slide. Bank stocks are not participating in the rally as much as some of the other sectors, and that's a telltale sign. Put your money where your mouth is, and the money's still going into bonds, which means that rate hike is probably not going to happen.
Let's talk about the NASDAQ, which hit a record high this week. Facebook, one of the strong leaders there. Is it too late to get into this stock? It just keeps climbing higher.
Everybody says that once in a while, pulls back a little bit, and maybe they're going to slide a little bit even further. But what we've seen is you buy that stock on dips. A lot of the concerns that they have by investors are waning a little bit. The ad revenue growth comparisons year over year, some of the engagement data is actually coming in strong. A billion users. I think we've talked about this before, this stock. And anytime it pulls back, you got to buy it because it's in that growth sector, and as long as the economy is stable and people are looking for yield, some type of growth stock, Facebook's going to be there. The FANG stocks in general have outperformed this week especially.
In another sector, you are watching Southwest. Why Southwest?
Yeah, I'm not watching it too closely. I don't fly the airline anymore. I used to fly it a lot, kind of pulled back from there. But what we're seeing is low oil prices, low fuel prices. But the airline sector as a whole just can't seem to get out of its own way. It's a cyclical cycle in this type of sector, where airlines, it seems like they do well for a year or two and then they start doing poorly. If the economy turns, we could see Southwest fall even more. It's down about 14% in 2016. That's with the economy doing well. Markets at all-time highs. Their headwinds are just kind of boggling to me a little bit. We're seeing some support around that $36 a share level. Every time it hits there, it kind of bounces off. But if we see a downturn in that economy, I could see the share slipping down to that $33 level, which was a recent low in there a few months ago.
Do you buy on that dip?
Oh yeah, for sure. Especially with valuation so low in that whole sector. They're a domestic carrier, so they don't have as much exposure over Europe and Asia, and where there's some slower growth in their economies. So we could see a pickup there if stock does slide down to that $34, $33 level.
One last name on your list, Under Armour. What's happening here?
Yeah, it's the same type of situation in that sector, the athletic apparel sector. Shares are down about 6% this year. We're seeing on a technical level, like I don't follow technicals that much, but I do look at them routinely, and we're seeing a golden cross, which is where the 50-day moving average moves above the 200-day moving average. And what that typically signals for technicians is a bullish stance. And that being said, I'm not a technician. There's a lot of charts at the bottom of the sea because the boats sink and they look at charts. But on that note, what we're seeing is Lululemon had bad earnings last week. The sector's kind of under pressure. But then again, that stock's also hitting support. And if stocks stay strong in the overall market, we could see some speculative call buyers in there, maybe up to that $39, $40 level, all the way out to January, which is bullish.
Just a plethora of action going on. Thank you so much.